Hey there, and welcome to Furniture Industry News, your go-to podcast for staying in the know about what's happening in the world of furniture retail, manufacturing, and market trends. Today is Wednesday, May 7, 2025, and we've got a full slate of important updates that professionals across the industry need to hear. Whether you're on the factory floor, in a corporate office, or out on the sales floor, this episode will help you stay a step ahead. Let's kick things off with the latest spending data from the first quarter of 2025. And it's not exactly uplifting. Consumer spending on home furnishings is starting to cool off, and surprisingly, it's high-income households that are leading the pullback. According to recent data, home furnishings retail sales dropped 5% compared to the same time last year. That's a pretty notable dip. Now, what's interesting here is that wealthier households, those with more disposable income, were the ones cutting back the most. That suggests something deeper than just seasonality or temporary shifts. It looks like economic concerns, like inflation or uncertainty about interest rates, might be weighing on consumer confidence at every income level. Now, not everything in the category is declining. Some subcategories, like kitchenware, home decor, and even rent-to-own furnishings, saw modest increases. But overall, furniture and home furnishings are definitely facing some headwinds, and this data came in before the latest round of tariff news, which we'll talk about in a bit. That means the dip in spending could deepen even further as external pressures continue to mount. And speaking of pressure, the manufacturing side of the furniture industry isn't catching any breaks either. April marked the second month in a row of manufacturing contraction. The Institute for Supply Management reported its manufacturing index dropped to 48.7%. That's the lowest it's been in several months, and anything below 50 indicates that the industry is shrinking, not growing. Furniture manufacturing in particular is feeling the pinch. Alongside wood and paper product segments, the furniture category was called out as one of the weakest performers. Companies are facing rising material costs and continued disruption from supply chain delays and tariffs. In other words, not only is demand softening, but it's also becoming more expensive to make the products that consumers are buying less of. That's a rough combo for any business. Let's zoom out for a minute and talk about international trade. Because it's not just manufacturing that's under stress. Exports are taking a hit too. The U.S. furniture export market is slowing down, largely because of trade disruptions and new tariff rules that went into effect this spring. At the Port of Los Angeles, for example, officials are projecting cargo volumes from China to fall by more than a third, about 35% in the coming weeks. That's a massive slowdown, and it's already starting to ripple across the supply chain. These trade issues are starting to look like the early days of the COVID-19 pandemic, when port delays, shipping container shortages, and inconsistent supply wreaked havoc on delivery timelines. Except this time, the root cause is policy-driven, not health-related. If things continue at this pace, we could see higher prices, more delivery delays, and even job losses within our industry if factories cut shifts or reduce output. It's definitely something to keep a close eye on. Now, it's not all doom and gloom out there. One bright spot is the housing market, which showed some unexpected momentum this spring. In March, pending home sales rose 6.1% from February. That's the biggest month-to-month gain we've seen in over a year. So, what's fueling this comeback? It's all about mortgage rates. The average 30-year fixed mortgage dropped from 7.04% in January to 6.65% in March. That's helped get some buyers off the fence. Now, pending home sales were still slightly lower than they were a year ago, but the month-over-month rise is a promising sign. Why does that matter to the furniture industry? Because more home sales usually lead to more furniture purchases. When people move into new homes, they tend to buy new sofas, beds, dining tables, you name it. So this uptick could mean a small boost in furniture sales later in the year. While we're talking about growth, let's highlight a retail success story. Bob's Discount Furniture is making big expansion moves in 2025. The company plans to open 20 new stores this year. Locations will include new markets in Michigan, Virginia, Nevada, and Iowa, among others. This type of growth is significant, especially in a time when many retailers are being cautious or even downsizing. Bob's strategy focuses on value, affordability, and strong customer service, things that are resonating with shoppers during uncertain economic times. By choosing a mix of established and emerging markets, they're setting themselves up to serve both existing customers and new ones who may be looking for budget-friendly furniture options without sacrificing quality. But even with signs of optimism here and there, the broader retail picture is still a bit foggy. The National Retail Federation recently issued a note of caution, saying the chance of a significantly slower economy is rising. They pointed to the same issues we've been discussing: sluggish consumer spending, trade disruptions, manufacturing slowdowns, and overall economic uncertainty. This doesn't mean a recession is guaranteed, but it does mean that business leaders need to plan for more volatility. Keeping inventories lean, watching freight costs, and finding ways to differentiate are all going to be critical in navigating the months ahead. Let's end today's episode with something a little more forward-looking: artificial intelligence. A new consumer survey found that 64% of shoppers believe AI will make the customer experience better in the next 2 to 3 years. That's a big number and an encouraging one. While AI might sound like a tech buzzword to some, it's already showing up in ways that affect our industry, from virtual showrooms and chatbots to personalized shopping recommendations and better inventory planning. For furniture retailers, this means there's a growing opportunity to enhance the way customers shop, both online and in stores. AI can help reduce wait times, answer common questions quickly, and even predict what a customer might need based on their browsing history. These kinds of tools can help stores stay competitive, especially as customers expect more personalized and efficient experiences. So, to wrap things up, we've got a mix of challenges and opportunities across the board. Spending is cooling off, manufacturing is slowing, and exports are facing new hurdles. But with housing activity on the rise and retailers like Bob's expanding, there are also signs of life and growth. Add in the long-term promise of AI in customer experience, and it's clear that staying agile and informed will be key for anyone in the furniture world. Thanks for tuning in to Furniture Industry News. If you found today's episode helpful, make sure to hit that subscribe button so you never miss an update. We're here to keep you up to speed on the shifts that matter most. Until next time, take care and keep building smart.